stream now. We just have different load bearing requirements. To make the otherwise soft rubber hard, we heat it with sulfur, that is vulcanize it, and later shape them into tires. For providing these tires with dimensional stability and support the vehicle weight, these tires are reinforced using organic fibers. For example, cotton, rayon, polyamide, or polyesters. Even plastic pipes, otherwise called as hoses, to be fit for industrial use are reinforced with organic fibers. Our today's session is reinforced by two of my childhood friends, Mrs. Shilpa M. Doreswamy and Shri Govind Sridharan. I welcome both of you. Our
Thank you.
principal, Dr. S.E. Nataraj, is here with us. I welcome him also. And Dr. M.P. Somashekharappa, who is head of the Department of Chemistry of our college, is also here with us. I welcome him too. Mrs. Shilpa Doreswamy was my benchmark during school days. She raises the bar very high and helps her friends get there too. She will today throw light on technology innovation in banking and financial services. Shri Govind Sridharan will chair this session. Before handing over the session to him, let me introduce you all to Shri Govind Sridharan. Govind is a successful entrepreneur who runs his technical textile manufacturing business, which is involved in production of tire cord fabrics, used mainly in tires and industrial hoses as key reinforcement input. Govind is an engineer, B.Tech from IIT Mumbai, and holds an MBA from IIM Ahmedabad. This is the same institute pictured in Chichore movie, and its director happens to be Govind Senior. After MBA, Govindji started his professional career with Hewitt Associates and subsequently honed several skill sets at Clinwelt Pet Marwick Godler, abbreviated as KPMG, a multinational service network and one of the biggest four accounting organizations of the world. He chose to quit his successful career as a management consultant with Dolit and Tush, where he was consulting with leading corporates across India and USA in several industries and areas including business strategy, mergers and acquisitions strategy, process and operational improvement, and people strategies to actively enter his family business about a decade ago. With this brief introduction of Mr. Govindji, I now request our principal to speak a few words.
Thank you, Dr. Pratima. I hope I am audible to everyone.
Yes, sir.
Yes, fine. Yes, first of all, I am very much honored to be there in this part of, webinar as a principal of this college. I welcome each and every participant of this session, particularly Srimati Shilpa and, Shri Govind. They have taken their time out and, they have agreed and they are, they have joined the session to share their knowledge and all that. I sincerely thank from the Department of Collegiate Education and from IDSG Government College for all the participants and the panel and the speaker, everyone, a great time of learning and understanding many things. I hope, best things will come out of this session. That is what is my wishes. Thank you very much.
Thank you, sir. I now hand over the session to Govind.
Thank you, sir, and thank you, Dr. Pratima. Though I very rarely call her as doctor, so I think I'll take the liberty of calling her as Pratima rather than doctor. Thank you for the wonderful introduction, and it's a great pleasure and honor to be able to be a part of this wonderful webinar. I think several of the topics which are in store for us over the next few days are very interesting, and hopefully everyone is able to get a lot of benefit out of being a part of these. Am I reasonably audible?
Yes, yes, Govind, you are.
Okay. Yes, Govind, you are. Okay. I take great pleasure in introducing Shilpa, MD. We all call her as MD. As the key speaker for the session today. Shilpa and I were also classmates in primary school, after which of course we branched our own ways. We met briefly in engineering college after which I branched out to IIT. So Shilpa did her engineering from BMS College in instrumentation and electronics, and she worked for a year in TCS. Subsequently, she joined Symbiosis Institute of Business Management in Pune, where she passed with A grade, and subsequently started her career with TCS. Sorry, with Shopper Stop. TCS was between engineering and MBA. So since then she's been across various industries. She's worked in Titan. She's worked in Shopper Stop. Then she's also been an entrepreneur herself, and she's done tremendous work in helping companies build business plans, build marketing strategies, improve their businesses. And as she says, she then chose to again come back into corporate. She's been working with Wipro for the last 7 odd years. She's a senior sales and strategy leader with Wipro, and is very active and an important person in their fintech business. She works with clients across multiple continents in India, in US, in Europe, in UK, and several other countries. She's currently based in the UK, which I think is the hub for a lot of fintech work across the world. So, Shilpa, the floor is yours. I'd like to welcome you and hopefully look forward to a wonderful and enriching session. We would keep about 45 minutes for the session, and maybe about 10 minutes in the end for Q&A, and then we will wrap up. Again, if we feel the need to go a little bit over, we can always keep that flexible, assuming that Shilpa has the time. So Shilpa, the floor is all yours.
Thank you so much, Govind, and it's delightful to have 2 of my classmates on this discussion, and one organizing and one introducing me. I wouldn't have imagined this when we were way back in school, sitting in the same bench in the same class. So thanks so much for that lovely introduction, Govind, and thanks so much, Dr. Pratima, for this opportunity. And of course, Nataraj sir, thank you again for the lovely introduction, and thank you for having us on today's presentation and discussion with your students. I hope all of you are staying safe and staying strong during these crazy COVID times. I must say, amidst all this, it must have been a tremendous opportunity or a task, I would say, for the esteemed faculty on this call to even have organized this speaker series remotely and with speakers from different, located in different destinations, countries, speaking on different topics. It must have been quite an effort to organize this whole thing. So it's a tremendous opportunity for the students on this call, and kudos to the faculty who has set this up. I know that the series has had different speakers talking on different topics, and I do hope today's discussion on technology innovation in banking and financial services will trigger some level of interest amongst all of you, if not some of you, because banking is so integral to all our lives that, we do banking transactions every day. I'm sure, the students on this call, they pay their hostel fees, they make transactions at the canteen, they have subscriptions in Netflix or Amazon. All of us today bank in some form or another. So it's very integral to all our lives. And most of us, if not all of us, are on salaried incomes. We do have to plan savings. We do have to figure where do we invest these funds? How do we grow wealth? So if not today, tomorrow as well, there are various aspects of finance that becomes very integral to our lives. So it's actually a very interesting, topic, and I have tried to simplify it as much today, given that the audience is more around chemistry and the subject discussed is more around chemistry. However, having said that, the subject is not as complex as we really imagine it to be. And just before I jump into the subject itself, just wanted to highlight that Chikkamagaluru has a very special place in my heart because my mother is from Tarikere, which is a small taluk. In fact, it's not small anymore. It's developed a lot. So she comes from Chikkamagaluru, and I have visited Chikkamagaluru and all the places, all the Kemangundi, Kalatgiri. I've had very fond memories as a child, meeting my cousins and grandparents there. So it's really wonderful that all this has come together, and I have this opportunity to speak to a college and students and faculty sitting out of Chikkamagaluru. So greetings to all of you from London, and I'm looking forward to a very active and engaging session today. I'll just bring up my slide, and I do hope you can see it. I hope my screen is visible, Pratima?
Yes, Shilpa, it is visible.
Awesome. So I hope after all this COVID situation settles down, I can actually pack my bags and get myself to Chikkamagaluru to relive some memories. And on the topic of COVID itself, clearly COVID has changed things on its head. If I was probably talking to you in the context where COVID had not happened, we probably would have been discussing very different trends and very different aspects today. But clearly, COVID has changed so much that, it's almost like pre-COVID and post-COVID. The trends that were predominant even without COVID have completely changed. What was not important before COVID has actually become important now, and vice versa. So today's discussion, I have kind of baselined it on COVID because it is the new normal. How has COVID impacted banking and financial services? And how has technology enabled banks and financial services to address this dramatic shift which happened overnight, and hence the innovation that needed to be adopted by these banks and financial services organizations. And through the course of today's discussion, I have used a few videos which are publicly available. I've just downloaded them from YouTube, not modified as such for the purpose of this discussion. There are a few brand names that will come up, but I'm not either endorsing or recommending them. It's just that those videos were relevant for the context of today's discussion, and you're free to access them as well. So in the context of COVID, the new normal, if you look at the different stakeholders from the perspective of banks and financial services institutes, one of the segments, of course, is retail customers, people like you and me. When COVID hit, there was a significant number of job losses, a fair amount of financial instability, which directly had an impact in terms of our consumption pattern and spending behavior. For example, if we used to probably step out to shop whenever we wanted to shop, buy one item on one visit, one or two items on another visit, and so on. But today we tend to visit once only and buy multiple items at a single time. And mostly all the shopping has shifted to online modes of shopping. So what we've seen is that the volume of transactions have nearly halved, while actually the value per transaction has nearly doubled. So that is one part of it. The other is the kind of skill sets that we need to have are tending more towards digital kind of skill sets, and not just in the technology space, but in fact, there is a retail chain which you must be familiar with, Tesco. They made permanent close to some 16,000 jobs when COVID hit. And the job profile was not about internal store staff or merchandising staff. These 16,000 employees who were made permanent were really drivers who could deliver the shopping. They were personal shoppers who could do the shopping for you since you couldn't physically visit a store. So the profile and skill sets of jobs also has shifted. Now, having said that, with all of us sitting at home, remotely working and stuff, now how do I therefore access medical care? How do I do my banking transactions? How do I do my grocery shopping if I'm sitting at home and if I'm not allowed to step out? So all these peripheral, services had to therefore become digital, and not just transition to becoming digital, they had to overnight shift to digital modes of providing these services to people like you and me who are sitting remotely. So it wasn't just workforce impact, it was also workplace impact, because all our meetings, even for all of you, all your courses had to shift online, teaching methodologies had to shift to online modes of teaching. So there was a complete shift in terms of workforce as well as workplace. And social distancing, of course, has accelerated, therefore, the adoption of various digital channels. So that's one segment. Now, if you look at the other segment of businesses, and here I'm referring to small businesses, the small retail stores or the small restaurants, small dealerships. I'm not talking of large, but these are small businesses who run on day-to-day or month-to-month kind of income. So when overnight they had to shut down, the immediate challenge for them was how do we stay afloat? So the government did introduce a lot of COVID, stimulus packages and guarantee schemes. So it was almost like a new relationship that these small businesses built with the government. And not just that, some of these small medium businesses do not even have access to banking, traditional modes of banking. So without accounts or without financial inclusivity, they were not even able to access government schemes. There was a massive challenge for this segment. And what these businesses realize is that the uncertainty that COVID has brought, we don't know when it's going to end. So it's not about staying afloat today, but it is about how do I become resilient from a business standpoint, from a long-term perspective. So the challenges are different, but nonetheless, there are challenges that both these segments, retail customers as well as small, medium businesses, have faced because of COVID. And these challenges were not there when COVID was not there. So it was very dramatic and overnight. Now, if you look at the banks, the financial institutions themselves, their own customers, retail, small, medium businesses, are going through so much of dynamics that even the banks need to catch up to that change. And when COVID hit, banks couldn't just shut shop because they had to operate remotely, because we're talking of bank employees who had to start working remotely from home. And mind you, these employees have access to a lot of banking transactions. They're actually accessing customer data. So if they're not sitting within the premises or the infrastructure of a bank, the question is, how do you make it remotely secure and overnight? So the challenge really was for banks to kind of catch up to this change overnight by ensuring that the business runs, the lights are on, and they're not switched off, and people like you and me can continue doing banking transactions even in the current scheme of things. Now, having said that, there are various other challenges as well. People who are digitally savvy like you and me, we probably were doing some 20-30% of transactions online earlier, and we've kind of shifted to probably 80-90% of online transactions. But if you look at other segments, like our parents or like our grandparents who have never really been digitally savvy, they're happy walking into a branch, chatting with the branch staff and, completing the transaction and coming back. Now, overnight, if you tell them, start logging in online and complete your digital transactions, and especially this segment, which is so vulnerable to COVID, especially had to stay at home. So banks, they have had concepts where they have tried to educate various segments of customers to become digitally comfortable and digitally savvy. So the concept of phygital, which is physical plus digital, picked up a lot of traction where, this vulnerable segment or the older community were allowed to, of course, maintain social distance, walk into a branch one at a time, stuff like that. But when they walked in, they were trained on how to be able to access banking services either on their mobile phones or on a laptop. So they didn't really have to come back to the bank or the branch next time, but they were kind of independent to kind of learn and go back and manage it themselves. So that was one part. So a lot of technologies and solutions around that space kind of picked up a lot of traction. The second is banks typically rely on net interest income, which really is the spread, the margin that the banks make, how much you lend versus how much you borrow, or how much a bank lends versus how much a bank borrows. Now, when COVID hit, the interest rates were dropped, and this net interest income, therefore, for banks, financial institutions, was hit. Now, how do they therefore recover that margin? Because what we are conscious of is that the bank not only has to run the business, like I said, but they also have to change the business at the same time. And everything is happening, literally parallelly. and literally at the same time. So banks had to start refocusing. In fact, some banks have already refocused on seeing how they can derive more commissions on investment banking, wealth management, which also means that they need to provide better services to their customers to be able to charge higher commissions. So a lot of technologies and solutions in that space, which delivered end customer experience, enhancing end customer experience, picked up a lot of traction. So I've just highlighted the various challenges that the various segments have faced. And now if you look at the fintechs, who are pretty much the protagonists of today's discussion, fintechs is fairly straightforward. It is nothing but finance plus technology. Any technology organization that is offering innovative solutions in finance are called fintechs. So it's very simple and as straightforward as that. And especially in COVID, fintechs were able to bring in a lot of innovative technology solutions which were able to help banks transition to a digital world. So these are solutions for a digitally enabled world, which is highly dynamic, and they truly are the future, and they have enabled the future. We'll spend a little more time on fintechs because that is the crux of today's discussion in terms of technology innovation in finance. And fintechs are those organizations that have, brought this innovation to this industry. So to demystify fintechs a bit here, I have a few videos which will also help establish the concept. But just before I start playing some of the videos, to give you a view, we have the banking, financial services, and insurance industry, which is BFSI in short. Now, payments, loans, asset wealth management, insurance, etc., are various functions that a bank typically delivers. And all these, bill payments, remittances, credit cards, funds rebalance, claims, policy management, etc., are the various sub-functions that a bank typically delivers. This is not an exhaustive list, but it's representative just to give you, a context. And of course, we have the regulatory compliance, risk monitoring aspect where banks are constantly monitored with whatever activities they do, because it's a very highly liable industry. And in fact, there are two highly regulated industries. One is healthcare and the other is banking. The reason is one has to do with your life, the other has to do with your money. And both these are very, very important aspects, as you can fully understand and agree. So this makes it all the more complex if any innovation has to be brought into this space, because it's under the watchful eye of auditors and regulators, because it's got to do with money. They don't want any fraud, financial crime, risk associated with any of these transactions. So any innovation becomes that much more complex. But having said that, the government has made a lot of governments across the world, in fact, have opened it up a lot to make it easier for fintechs to kind of bring in the required innovation as long as they're adhering to various policies and requirements. So while these are the functionalities of a bank, typically, you also have this layer, which looks a bit faint on my slide. I hope it's visible for all of you. But we have this layer here of technologies. These are relatively, I wouldn't call them new technologies or emerging technologies, but there is a lot more that can be done on them, and hence probably would refer to them as emerging technologies. You have artificial intelligence, machine learning, blockchain, cloud, data, and customer experience. All these are buzzwords that you have already heard, I'm sure. We'll dwell a little more. I'll give you a few examples to make it a little more, clearer. And this is nothing but the A, B, C, D, E strategy that we typically refer to in the BFSI space. Before I get into specific examples, I'll play a very short video just to kind of establish the concept of what are fintechs. And very simply put, it's a dynamic segment at the intersection, like I said, of financial services and these technologies, where a fintech typically uses one or more of these technologies to provide enhanced functionalities across one or more of the services that a bank typically provides. So essentially, a fintech is an intersection of any of these processes with whichever technology. So I hope the video will play. While we're talking of technology, here is a technology challenge I see. We'll probably just give it a couple of seconds.
payment online, then you're already part of a multi-billion-dollar industry. It's called Fintech, and it's changing economies around the world. Fintech is short for financial technology. Seems simple, right? Well, the term fintech includes a huge range of products, technologies, and business models that are changing the financial services industry. It refers to everything from cashless payments to crowdfunding platforms to robo-advisors to virtual currencies. So every time you donate to someone's Kickstarter campaign, that's fintech. Or if you transfer money to someone using Venmo, that's also fintech. And that's just the beginning. Here at a major fintech conference in Amsterdam, hundreds of companies are trying to disrupt the banking and finance industries by changing the way we pay and borrow money. And investors are buying it. Global investment in the fintech sector has added up to nearly $100 billion since 2010. In 2017 alone, fintech investment surged 18%. Startups focusing on payment and lending technologies received the majority of those funds. It's not just startups that are getting into fintech. Some of the world's biggest companies, from Apple to Alibaba, are going big on it too. Just think of Apple Pay or Alipay. One reason for all of this investment, consumers are adopting fintech fast. 1 out of every 3 people across 20 major economies report using at least 2 fintech services in the last 6 months. China and India are leading the way, with more than half of consumers using services like money transfers, financial planning, borrowing, and insurance. Financial technology has filled a void for people around the world who don't have access to traditional banking services. In fact, it's estimated nearly 2 billion people worldwide are without bank accounts. Now, thanks to fintech, all you need is your phone to take out a loan or insurance. Take Kenya, which pioneered a mobile banking system called M-Pesa. Kenyans access their M-Pesa accounts directly on mobile phones to transfer money, pay bills, or take out loans. Today, an estimated 96% of households in Kenya use M-Pesa. And one study found it has helped lift roughly 2% of Kenyan households out of extreme poverty. The rise of fintech has forced traditional lenders, insurers, and asset managers to embrace new digital technologies. For example, wealth managers now have to compete with robo-advisors, which are automated financial planning services. I mean, talk about rise of the robots, right? Thanks to high-tech algorithms, these services are available 24/7 and can be more affordable than traditional asset managers. That helps explain why some robo-advisors already have billions of dollars under management. Like any growing industry, fintech isn't without risks, and some regulators have struggled to keep up with the fast pace of innovation. Think of peer-to-peer lending platforms, where individuals borrow and lend without going through a bank. Compared to traditional banks, these services might not be required to set aside as much money in case customers default on their loans. This can be risky for companies and consumers. Data privacy is another major concern. As more financial services go digital, cyber attacks become a bigger risk. The challenges facing financial technology are likely to grow as more businesses go digital. But for many of the companies and consumers here, fintech is more than a buzzword. It's a big business opportunity.
Yeah, so coming back, I think we heard a few key words: risk, data privacy, cyber attacks, and so on. Clearly, when everything, it opens up the world to cyber criminals, there is so much more for them to do. And it is very important for banks, financial services institutes to tackle this kind of sudden surge and avoid risks, fraud, cybercrime, and so on. So just to give you a few examples in terms of how this technology has been adopted by a few fintechs to deliver select processes. Let's take the first one, AI and ML, artificial intelligence and machine learning. And on the topic of risk regulatory compliance itself, if we draw a connection between AI, ML, and regulatory risk compliance, I'll take an example of when I came to the UK a few years ago. To open my account, it was all physical then, right? There were no fintechs as such then. So I think there's a bit of disturbance, or is someone trying to say something?
No, Shilpa, I think there was, by mistake, someone had unmuted. You can carry on. I muted.
Oh, okay, perfect. Thanks. So just taking the example of when I landed in the UK a few years ago, and I had to open a bank account. So I walked into this branch. I got an appointment 2 weeks, a 2-week later appointment after I landed. So I walk into this branch and they tell me to bring my documents, some 4-5 documents, get a photograph of myself. And they gave me an appointment 2 weeks later to go back and submit those documents. And mind you, I've lost 4 weeks already, a month, and I don't have an account to put my salary into, but I still have to pay my rents, and I still have, whatever other expenses, regular expenses, and I still don't have a bank account. And 2 weeks later, of course, they manually validated the documents, verified it, and approved that I can be issued an account in this bank. So it took me like 6 weeks to actually get an account after having landed in the UK. Now, cut to today, with a fintech, I can just open, say, an HSBC app. If I want to open an account there, I just open the HSBC mobile banking app on my phone, and I raise a request saying I want to open an account. So immediately it tells me, okay, these are the 4-5 documents you can click a picture of, click your selfie, and hit a submit. So I do that. And on the back end, you have software technology solutions, which are essentially leveraging technologies like AI and ML. So these solutions are taught, in the sense the machine is taught various types of risks, various types of frauds. It even has various fraudsters listed, which it has completely learned across the world, data across the world that it has learned, which you wouldn't typically expect a manual person to be able to kind of validate physically. So the machine has learned various types of frauds and fraudsters, and using its intelligence, the artificial intelligence aspect of it, it does a tick on the documents that I have submitted. It validates the documents and approves that I can open an account. Now, this whole process of me having raised a request to, open an account, having submitted my documents, and having gotten a validation to open my account has taken about 2 minutes. So today, using my mobile phone enabled with technology, I can actually open an account in 2 minutes versus the 6 weeks that I had taken when I initially landed in the UK. So this is the kind of value that technology innovation has brought to not just make things faster and better, but look at the delight in terms of the experience that I got, because I'm sitting at home and I'm able to open an account versus actually visiting a branch twice or thrice to, physically go and request and ensure that I get an account. So that's one part. Probably I should play another video just to give you a view in terms of how this digital onboarding and heightened online authentication typically works.
Fraud and financial crime have no place in your financial ecosystem. That's why a way to know if your online users are who they claim to be. Jumio uses the power of informed AI to help you rapidly convert more customers, stop fraudsters from the very beginning, and help you streamline eKYC. Here's how it works. Jumio begins when a user initiates a scan of their ID from the device of their choice. Jumio supports over 3,500 ID document types across 200 countries and territories. From the ID scan, Jumio uses informed AI to immediately spot fake IDs by checking more than 20 different embedded security features. Next, the user snaps a selfie to prove they are the same person shown. Here, Jumio's face-based biometrics and certified liveness detection ensure the person holding the ID is physically present during the transaction. Finally, with Jumio, your user gets a definitive yes or no answer within seconds, reducing their wait time and maximizing conversions. You are saved the time and expense of having to perform manual reviews. Trusted by leading brands across the globe, Jumio's award-winning technologies.
Yeah, so Jumio is one such ID verification fintech, and there are many other industry today. So that was on AI ML. Now, if you look at blockchain, I'm sure you've all heard of this buzzword blockchain. Fairly straightforward. It's nothing but a chain of blocks, and each block is nothing but a record. So it's really a growing list of records, which are called as blocks. It's just that they're linked using cryptography. And what are these records? These records are nothing but transactions between two parties in a very permanent and verifiable way. So typically, if banks have to, blockchain is applicable across various industries, but in the context of banking financial services, banks typically form a consortium, so multiple banks can have access to the same set of records. Let's take an example here. Suppose customer A wants to open an account and goes into a bank A. Now, all these banks, along with investigating agencies, are all part of one blockchain consortium, for example. So bank A raises a request to validate this customer, to check whether the customer is fraudulent or not. So the investigating agency conducts whatever exercise, validation, etc., and puts a tick mark on the record of bank A saying that the customer is either fraudulent or not. Now, as soon as this document or this record is updated, the various other banks who are part of this consortium also have access to the same record, and the record is updated with a date time stamp. So when the customer A goes to bank B, for example, tomorrow, saying he or she did not get a bank account in A for whatever reasons, so can bank B create an account? Now, bank B does not have to raise another request to an investigating agency to do validation about the customer. In fact, the moment the record was updated by the investigating agency in the first place, bank B has already got an alert about this customer. So it kind of makes the whole process faster. It makes it that much more secure, and becomes a very key and critical tool to avoid various forms of fraud, either international or otherwise, in terms of avoid it from being committed. If you look at cloud again, of course, very common buzzword, all of us are familiar with it. But just to take a very, very simple example, earlier on, I think all of us have done this. We've recorded music on our tapes, on our USB sticks. We've had probably hundreds of tapes and USB sticks lying all over our houses. But today, we can actually store all this on a cloud space. You have a cloud ID, you buy some online storage space, and you can actually download all your music, photos, whatever else, and store it online. So with this, I can actually listen to whatever music list of mine or music collection of mine without having to be dependent on it, but I can listen to it any part of the world, wherever I am, without having to actually physically transfer all these tapes and USBs. I also don't need a space to store these tapes and USBs, for example. Now, if you draw a corollary of the same concept to a bank, which typically deals with billions of records of customer data, if they have to physically store all this data, they have to not only have physical storage, they also need the space to have these physical storage units stored. So by eliminating it and by leveraging the cloud, these banks can achieve tremendous cost savings. And another thing is, with data being therefore accessible to anybody, anywhere, any bank branch or any bank subunit, any part of the world, has access to the same data of the same customer, for example. Typically, various departments within a bank used to operate as independent silos. For example, if a customer has to walk into a bank to, apply for say an auto loan, goes to the auto finance department and probably faces some challenges in paying the loan, etc. But 3-4 years later comes to the same bank to apply for a mortgage, a home loan. And earlier days, the home loans department did not really speak to the auto loans department, and the data didn't really interchange. And hence, both the departments didn't really know that this customer used to be a customer of the bank and has defaulted in the past, but instead probably ends up making the mistake of issuing a loan again to the same customer. But with data being accessible in a unified manner across the organization, the banks can make very informed decisions. And secondly, if the same customer has been, a customer of the bank in the past, and you figure that the customer has come back 3-4 years later, you can actually welcome the customer back and deliver much more enhanced customer experience, to a customer who has already been part of your banking services, just by leveraging data that used to sit in silos before, but today is accessible uniformly across various branches and parts of the world. And like we've been speaking, data seems to have been very integral to various aspects that I have been speaking today in terms of machine learning. Machines have been learning about various types of data. Blockchain had to do with data, as well as cloud in terms of making data accessible. Data in the context of, say, asset and wealth management. Today, a lot of us struggle in terms of the financial literacy to be able to manage our own funds. Where do we invest? What assets should I buy? Which stock or share should I buy or sell? So all of us tend to grapple with that because there is so much of research that goes into making an informed decision that we kind of shy away, and we tend to leverage investment advisors or wealth management advisors to guide us through this whole maze of finance. So there are various fintechs and solutions that are there which help to provide a 360-degree profile view of your own investments, your own assets. It also does a fair amount of, all this research that is required for you to be able to make an informed decision. In a lot of cases, these tools and solutions, which are called robo-advisory services, also provide advice to your investment manager or your wealth management advisor to give you an informed decision about where to invest, what not to do, which stock or share you need to buy or sell. So it's essentially equipping yourself as well as your advisors to make very informed decisions. And just a very quick video before we jump into the next slide.
Robo-advisors take many tedious tasks off the hands of investors. In the past, specified portfolio of investments geared towards your time frame and sensitivity to risk, but didn't want to work with a professional advisor, you had to handle the research, pick the investments, and do all the buying and selling yourself. Maintaining your portfolio also meant monitoring it regularly to keep everything on track as the markets changed. You also had to decide whether or when to harvest losses to offset taxable gains elsewhere in your portfolio. This took time, not only time to manage the portfolio, but time to develop investment strategies and expertise. Now, robo-advisors can do most of this for you, breaking down old barriers of time, knowledge, affordability, and access to put sophisticated investing advice, research, and monitoring into the hands of many.
So in a nutshell, I do hope we've established the concept of fintechs, and they're very integral to innovation in the banking financial services space, and very integral and embedded in our daily lives in terms of all the banking transactions that we typically do. So just moving on to the next aspect, while COVID did have significant impact, but in the context of fintechs, it clearly accelerated the adoption of innovation and digitization in the banking and financial services space. And to just lay out this graph very quickly, it is about how do banks, financial services institutes generate business value by focusing on specific areas, and what are the trends that influence those specific areas. So when COVID hit, the first thing banks had to do was to respond. And like I said, employees had to work from home remotely with secure access, robust infrastructure. In fact, at some point, employees were allowed to go back to their workplaces, but were workplaces ready in terms of, following COVID guidelines? So a lot of aspects around work from home, technology resiliency, workplace readiness, workforce flexibility, all these aspects came into being. So it wasn't just technology and infrastructure, but there was a huge people element in terms of the response that banks and financial institutions had to take. And given everything was becoming digitized and data had to be accessed anywhere, anytime by anybody, cloud adoption strategies of banks, which typically were lined out for probably 3 or 5 years hence, overnight when COVID hit, banks had to revisit their cloud adoption strategies. They had to revisit their budgeting and refocus on adopting cloud much faster than they had already envisaged. And like I also mentioned, with it opened up tremendous opportunities for cyber criminals and different types of fraud. So all this had to be kind of stopped in its tracks even before it happened. And like I also mentioned, it's a highly regulated industry. So any liabilities become very, very critical for banks to survive. And of course, the operating expenses, in the sense, if a bank has to run the business in the current scheme of things, at the same time, parallelly also has to change the business. How do you and where do you get the monies to do this? So the idea really is to be able to drive automation in the back office processes, make those processes efficient. For example, the simple example that I gave on my documents when I opened an account in the UK, instead of actual manual validation of these documents, if you instead introduce a machine to do this, you not only can validate more number of documents more accurately, but also if there are exceptions, only those exceptions are addressed by the manual workforce. So the manual workforce is used very optimally, and you provide solutions to this manual workforce to do their jobs better. This you drive a lot of process efficiencies, a lot of cost reduction, and you bring those savings back to be able to drive change and digitization. So you kind of rebalance how you manage your expenses to be able to run the business and change the business at the same time. And business continuity and resiliency was a key factor that drove these focus areas. Now, obviously, after responding, there were various transactions that had to be enabled digitally for customers. And the first thing was really the government that introduced a lot of stimulus packages in the context of COVID. And a lot of businesses had to apply for loans and apply for this government scheme. They had to reach out to banks with a lot of loan applications. So banks were inundated with huge number of loan applications, which they had to process accurately and fast to ensure that there were no fraudulent loans or fraudulent applications for this government scheme. So a lot of solutions which helped banks make this dynamic credit decisioning in real time, real-time risk profiling of customers came into play. There was a lot of traction of those kind of solutions. And by virtue of this, there is a lot of data that is generated because there is so much of digital data. All of us, when we access whatever social media, etc., all of us leave behind a digital footprint. And I think they are a very critical role in the post-pandemic world. And credit risk modeling, by virtue of that, will become that much more robust, where banks are more knowledgeable about the various kinds of risks associated, and hence can build very robust credit risk models. There are also various segments, which I very briefly touched upon earlier as well, who do not even access banking services because they have traditionally been mapped as risky customers, because banks have relied on very traditional types of data, the types of data that typically sits in credit bureaus. But data-driven finance will be very critical to drive more financial inclusion. I'll spend a little more time just after this slide on that. And all of us today, it's a generation of instant. We want everything now, here, So the world is moving really fast towards real-time payments. The moment I hit a send for, say, a fund transfer to somebody sitting in India, the fund is transferred immediately. The data is reconciled immediately. It appears on their bank statements immediately, and they can actually go and shop or whatever using the funds that I have transferred. So there are a lot of payment schemes that allow faster payments and instant payments. We're also familiar with virtual cards and digital wallets, which are already here in some form or manner, but they will become mainstream as we go along. And India has the QR code touchless payment that I'm aware of. The UK has something like the contactless. You just tap your credit card on the POS device and the payment transaction is made. You don't really need to hand over your credit card to somebody. So there's a lot of process reimagination in terms of how do you completely change the way things were done before. It's not just about digitization, but how do you change the entire process? And this is the sweet spot for technology innovation, where fintechs can completely redefine a business process. And as things are becoming digitized and evolving, even our expectations as customers are constantly evolving. We want more everything now. So banks will have to invest in predictive modeling to be able to provide the right information to the right customer at the right time. So a lot of personalization of data will become very critical. And conversational banking, the chatbots. I'm sure you all have interacted with some sort of a chat assistant on various banking services. But bots are becoming more intelligent. They don't just understand your language or questions, but they also understand the emotion behind it. Suppose you say something with an exclamation or a question mark. It understands that you're not asking a question, but it understands that you're either angry or disappointed or upset. So bots are becoming very intelligent. So the interaction and conversations or the conversational banking is becoming that much more mature. And Roboadvisors, you saw a quick video just earlier on, so wouldn't want to dwell much on that. But with branchless banking, social distancing, remote working, etc., people are not really walking into branches today. In fact, in the UK alone, close to some 700 branches have already closed, and all that now is becoming digital. So customer experience, customer reach, loyalty, how do you acquire new customers, how do you retain existing customers, or all the focus areas that a bank needs to typically look at. And just moving on, I know I'm conscious of time. We probably have another 5-7 minutes. So just to leave some thoughts in terms of what's in store in the future, while all these concepts are kind of there in some form or another today, they're evolving, but will become more mainstream as we go along. The first example, or rather the first potential future scenario, is banking as a service. Let's take an example of, suppose you want to open an account and you will need your PAN card. The PAN card has to be validated for you to be able to open an account. Now, the bank traditionally does not provide PAN card validation, but there is a service provider who provides PAN card validation, and that service provider provides that service as a service to the bank. So when you go to a bank, for you, it is very seamless. You believe you're transacting with the bank, but clearly the bank is using the service from another service provider who does PAN card validation. Similarly, there are various other providers that offer, say, payments as a service, or risk management as a service, or treasury as a service. So by virtue of this, the bank itself does not need to build the entire banking stack, because there's a lot of investment that goes into building each of these stacks. Instead, they use technologies or service providers who provide these various services. And especially with fintechs now, there are very innovative solutions that are available across all these areas and leveraging all these new technologies that we spoke about, AI, ML, cloud, blockchain, and so on. So it's almost like, picking and choosing and building a bank like Lego stacks, very simply put. And there's a new segment of banks in the UK, Europe, US, and most parts of the world called the challenger bank segment or the neo bank segment, where some of them don't even have a banking license, but they can do some basic account opening and probably stitch together a couple of these services. So they typically go to a bank which has a license, to bank in whichever country, and they stitch together a couple of these services and actually provide banking services to an end customer like you and me. So probably if you have a couple of millions, you too potentially could launch a new bank. And if you look at embedded finance, taking an extension of banking as a service itself, in fact, Uber as a brand is introducing or has already introduced payments and account services to their drivers, because they realize that relying just on margins of the rides that they provide as a ride sharing company, they realized, how do you ensure more loyalty of these drivers to Uber as a brand, as well as how do you create newer avenues to improve your margin. So Uber is now actually providing banking services, not just to its drivers, but to everybody. And they also realized that this worked well because drivers prefer to do banking services through their employer instead of elsewhere. And as a customer of Uber, I might want to use some of Uber's banking services myself. So when financial services are provided by non-banking organizations, like say an Uber or an Apple, but these services are integral to our daily lives, it's called embedded finance. For example, Apple as well, it used to be our computer company, but now we already have Apple Pay, which we just tap our phones and the payment goes through. Apple has also introduced credit cards. And even Facebook has launched Facebook Pay. So various technology companies like Apple or rideshare companies like Uber, social media platforms like Facebook are getting into banking and financial services. So by virtue of this, for customers like you and me, banking is becoming very integral to our daily lives. It's very easy, therefore, for me to, make or withdraw payments using Uber or make some transfer of funds to my friends and family through Facebook. So it's very integral to our daily lives. And lastly, the underserved segment, which we very briefly touched upon, financial inclusion. And also one of the videos highlighted there are close to 2 billion people who are not even banked. And especially emerging economies have huge numbers of population who are not banking through the traditional, modes of banking that you and I typically do. And currently, people without a financial identity are automatically locked out of the credit market. And individuals with, limited financial data are categorized as high-risk default clients. And typically, this segment of people are therefore charged either higher interest rates or they have to submit, more collaterals to be able to get a loan. This is because the segment of customers has been measured on very traditional credit scoring methodologies. But however, this segment typically lives on, a month-to-month income. So if a bank kind of validates whether this customer has the ability to repay a loan, whether this customer has a 3-month cover and hence will be able to repay the loan, then automatically the customer is not issued a loan because this person really has literally a month-to-month kind of income. But if you use alternate types of data to, assess this customer's loan repay capability, for example, has this person been paying all his or her phone bills, energy bills, water bills, some sort of psychometric test based on the social media, that this person typically accesses and how this person behaves on social media, then it throws up a completely different dimension of the customer. And therefore, the customer may not even be high risk in the first place. So a key priority really should be to broaden the access of low-income households and small, medium businesses to financial products. And innovation is happening in all these three areas today. There are some options that I mentioned, but clearly there are more, gaining traction. It's about tapping new segments in terms of the untapped or the unbanked set of customers. It's about providing new opportunities for people. Like I said, you just might be able to open a bank yourself. And the future is very exciting. COVID has only accelerated the adoption of innovation at a dramatically fast pace. And with that, I hope I have baselined and provided some insights to you in terms of banking financial services, the various technologies, and the various kinds of innovation. I do hope it's triggered some interest in all of you to familiarize yourselves more. It's an exciting space, so do stay in touch. I'll take a pause here, Pratima.
Yes, Shilpa, you can stop presenting.
Perfect.
Yeah. I request Govind.
Yeah. Thank you, Shilpa. I think it's been a very session which has been extremely enlightening. And more so, as you spoke and we went through several of the examples and videos, we realized how much we are living through a fintech revolution. Almost most of us who are thickly into banking, both private as well as business, will realize that there is some fintech which comes into every aspect of banking which we're doing. Whether it's in India, starting from when you apply for a loan, one of the first things they check is your CIBIL score, which is your credit rating, and that I've always been amazed as to how they're able to aggregate so much data from all kinds of payment history which you might have across, as you said, across loans, across credit card payments, across various other payments, and the score which comes out has been used by banks for a long time to decide what kind of how much of loan is to be given to somebody, or interest rates, or how interest rates are to be decided. So CIBIL has been there for a very long time, but today of late, in the last 1.5 years, we're finding fintech. We're recognizing several fintech innovations in our day-to-day life, starting from online shopping using Amazon Pay, or using big basket wallets, using Paytm, Google Pay, or UPI, which the government is greatly pushing after the, especially during COVID and after the demonetization started. I think fintech is poised for very exciting times in the days to come or years to come. And I think it's a huge ocean with lots of opportunities where every small thing, there is an opportunity for innovation. And we already have quite a few unicorns in Paytm, in several other companies who have been able to take advantage of this fintech space. And obviously, I'm sure Wipro has been at the back end with many of these companies, providing them valuable advice and technology support. So I think, yeah, we're in for some very exciting times, and this session has really helped us get a fix of where fintech really comes in our day-to-day lives, whether we are and most of this, I don't think any of us even realize that there is fintech touching every part of our banking and financial dealings in our daily lives. So with that, I'd like to thank you once again for taking your time out on a working day and sharing your insights with us. Thank you, Shilpa, and I hand over now to Pratima to finish and take it forward.
Thank you, Govind. Thank you for chairing this session so well. Shilpa, kindly stop presenting for one moment.
I'm just trying to see where I can stop presenting. Yeah, there it is.
Yeah. And I request all the participants to just turn on your videos for 1 minute so that we can have one group picture, virtual one. All of you. Yes. Yes, may I have many more here? Yes, please. All of you. Yeah, we can have a virtual picture at least. Yeah. Thank you. Just a minute. Yeah, thank you. Thank you so much. Shilpa, with just 4 slides, you taught all teachers how effective a presentation can be with just 4 slides. We run many slides, we use so many slides, but the way you presented it was really wonderful. Thank you, Shilpa. And thank you for this wealthy session. It took us into in and out of banking future. Thank you very much. And thank you, Govindji. Thank you, Govindji, for sharing this session. I'm sure if bots would be here, it would say we are all happy with today's session. Okay, we would have all smileys everywhere. So on behalf of all college staff, on behalf of Department of Chemistry, uh, on behalf of College IDSG Government College, and all my colleagues, I thank you very much for this wonderful session and having taken your time off, especially during a working day and early in the morning. I can see Thames behind you, and it's a lovely picture there. Okay, thank you both. And I'm now pasting the feedback link for everyone. Kindly, you can fill in and you can get your e-certificates. And now we are stopping streaming. We were streaming until now. I'm going to stop streaming. And thank you, Shilpa. Thank you, Govind. We'll
Thank you
officially
so much.
end the meeting now.